Bismillahirrahmanirrahim. Assalamu alaikum, students. Hope you all will be doing well and enjoying the holy month of Ramadan. Now, in this lecture, we will discuss the financial plan part 2 in our series of lectures on the business plan, then the marketing plan, then we came to the organization plan in the final phase of our series of lecture on making a good business plan is the financial plan, and I have divided it into two parts so that we can cover it a bit detail and critically, analytically, so you guys really understand the concept and develop the ability to apply them in the practical world, as I have given you different assignments almost 1 month ago, and you all have to produce a report in the till 15th of May, and that will be evaluated, and I am expecting good reports from you. Okay, boys, coming to the next slide here, the rising that jet. I am very much fond of jets from my early childhood, and planes are a passion for me, and I love them because in planes you can fly in the sky, and from the sky the earth seems a different give you a different perspective. And the person who is flying the plane, the fighter jet, if you ask him, he will say that when I fly, the flying delights me. I came out of my body and I am really delighted, and I go to the realm of ecstasy. In this picture you see a plane moving very high. It is moving upwards while a bright prospects. So your business should be like that. You as entrepreneurs should be very clear about the horizon and the direction and the target you want to achieve, and that is only possible if you have good plans. You have really smartly, really tactfully used your money and its use in the best possible way. Again, a plan, a moon and its movement, really beautiful. Your plan should be like this jet, moving and flying high, but with the best skills in their application. Only it's possible that your business should be like this plan, or you as yourself as a product in the market would be like this plan. And I would like that all of my students are like this plan. Again, I would never like that. Nobody would like that his plans are, his business and his image is like this Indian Mig crashed and gives a very bad signal and damages in human casualties and other things you can understand. Now coming to the Forma Cash Flow, as cash is the most important thing, is in English quotation that a bird in hand is better than two in the bush. You can understand that money in your pocket is much more better than money outside. You own that, but you didn't can purchase things on it unless and until you convert that assets into cash. The most near assets to cash are, let's say, that is gold. You can easily convert it. That is treasury bills. That is dollars, the hard currency. That is any other valuable thing which is very much needed in the market. Your skills, other things which people buy. If you have highly skilled in your field, sky is the limit. Cash is no problem for you. So cash is the most important aspect again of any business, any startup. And what is actually cash, the total disbursement you as a businessman do, you as a owner of entrepreneur do in a period, let's say 1 month, and total cash come in that 1 month into the business, while already cash you have in the bank. That will show your net worth at the month end in the cash prospect. So cash management should be done in a very careful, in a very planned way. Sales may not be regarded as cash. As you know, students, cash is anything which is in dollars, in rupees, that is in your account, not the things you sold in the market, the services, but the payment will be given to you on some future date. That is not cash. That is, you have a legal title against that money, but you have not yet received it. Again, another source is you take loan from a bank, from your operations, seasonal operations, or you sell some of your valuables, land, other property, and cash come to your business. Use of profit as measure of success may be very deceiving, illusionary. Okay, if there is significant negative cash flow can be projected using the indirect and direct method. Now coming to the next slide, what is the indirect method, or the statement of cash flow? The pluses show that if in those heads figures are moving up, then it means money is coming into your account, cash is coming into the startup, the business firm account. But if the figures, the payments are in negative, then cash is going out. Very logical, common sense says that when things go out, that is money going out. When cash is coming, money is coming in. But here, so there are some technical terms. Depreciation is what? That is a plus. Money is going out, but it's not going out of the business. You have purchased an asset in past. Now you depreciated it for 5 years. That is 5 lakh rupees. Each year you take from the profit 1 lakh rupees and take it into an account. For 5 years you take that 1 lakh into that account. So that is cash readily available. That is not an expense, that is income. Cash provided changes in the current assets or liabilities. आपके जो your current assets and liabilities, as we see in the standard balance sheet equation, that assets is equal to owner's equities and liability. If there are increases in the accounts receivables, that is cash is coming in. Accounts receivables are those money against which you have rendered services, are the products you sold to the distributor or wholesaler to the end customers, but he has not yet given you, pay back you the money. So you own a legal title to that money and he will give it to you. But on the other hand, account receivable decreases, so your cash is decreasing. Increase or decrease in inventory. Increase in inventory means what? Cash is increasing, that is an asset. Asset is increasing. Decreases in inventory means cash is going out. But it does not mean cash is going out of the business. That means that inventory is used in the production process, and value added products, like if it's a automobile company, automobiles are made and sold in the market, and money will come against them. Increase or decrease in prepaid expenses. Prepaid expenses, you give money to your vendor, your supplier, against which he has to give you service in the future. Okay, so yeah, you give a service in the future. So the money you receive today, but the service will be delivered in future. Cash came, but the service not yet delivered. Increase or decrease in accounts payable. Accounts payable, the money you have to pay, salaries, taxes. Till the time you didn't pay that money to the government, to the employee, to the supplier, it is with you in the form of cash. When you give it to you, cash is going out. Now, another aspect of cash operating activities, like cash flow from other activities, capital expenditure, any major project, purchase of machinery, payments of debt. You normally students, the business organizations take loans in the seasonal peak. For example, Pakistan Tobacco, when they are purchasing tobacco from the growers in the tobacco growing areas, Mansehra, Swat and Bonair, Charsadda, Peshawar, they have operating our seasonal facility with different banks, and seasons they on certain markup take loans for 1 to 3 months and then give back as per the terms with the financial institutions, I mean banks. Payments of debts, dividend is paid to the shareholders, that is profit of the corporation, and the shareholders are owners, so they have a right to receive dividends from the profit generated by a corporation which is owned by them. And it is the beauty of free market economy that ownership is recognized. Titles against any property, assets, your skills are recognized, and it is paid by the system. Sales of stock, new stocks sold to the investors. So when they purchase, money come, while ownership in the company goes towards the shareholders. Net cash provided by the other activities, increase and decrease in cash positions. Now come to the entrepreneur must pro forma cash flow continued. Entrepreneur must make monthly projections of cash, because cash is very important aspect of any business. Many businesses are sometimes unable, very energetic, very growing businesses, but unable to pay their liabilities in short term, like Enron, which was energy company in USA and among the top 10 companies in USA, billions of dollars profits and image in the market. But suddenly they were unable to pay their liabilities, and technically when a company didn't pay their liabilities, it has to apply for the bankruptcy under Chapter 11 in USA, and then the judge, Security and Exchange Commission administrators see whether to bail out you or to sell your assets, and whatever come that out of the sale, that is distributed among the different liability holders against the company. So sorry, we have come a bit. So large positive cash flows need to be invested are deposited in bank for periods when disbursements are greater than receipts. Then there are seasonal peaks. In seasonal peaks, more money come into the business. For example, if you are producing sweaters, so sweaters are normally sold in cold weather, jackets, things like that. So in winter, cash come to the business, and that is cash is more than your requirement, so you invest it in different productive investments, have a handsome return for you, while the months where your sales are not good, you use that money. Determining the exact monthly receipts and disbursements is difficult, but a near to reality figure, to calculate a figure is not a difficult task. What you have to do, guys, is that you should be very much objective. You should scan the primary secondary data very carefully and check it against other industry trends, against the Bureau of Statistics in SMEDA data and the international trends, and it will give you a very realistic picture. Forma cash flow is based on best estimates. Best estimates are those estimates which are very much near to the actual reality, as all the plans are for future, so they have not yet implemented. They are forecasted plans, and it will be implemented, but again it is based on real-time data, as we have told in the previous lecture. Now come to how cash is generated in the business. So we know that it is generated either by sales, either by selling your other assets, or by taking loan from someone. Over here you will see sales, and then will come the gross income. Okay, and then the different expenses will be deducted out of that sales, and you will see a total disbursement of cash money going out of the business. What is your beginning balance of cash? It is this is the amount going out. Okay, and this will be left at the month end, and it will be brought forward to the next year. It's here, and again the whole month you will see how the different heads changes figures, and again calculate it. You will come to a final figure, that is 116.9 million rupees, or dollars, but over here we have written dollars, it's dollars. Now we see that there is a steady decrease in your ending balance each year, because your business operations has started, and now you have to invest in different activities, operating activities of the business. But please remember, student, that cash flow statement and income statement are for a period of time, where as you see in the slide, the balance sheet is picture of the business at a certain point. Okay, that is the position of business at a certain point in time and space. A bit philosophical. Summarize the projected assets, liabilities, and net worth of the new venture. It is a picture of the business at certain moment in time and does not cover a period of time. As I have told you, certain moment in time consists of words assets, liabilities, and owner's equities. Okay, assets are those things which can be converted into cash. It may be current assets that is easily converted into cash, and your fixed assets that cannot be easily converted into cash. Liabilities, money owed to creditors, bankers, or some other people, can be current and long-term debt. Owner's equity, amount of money invested by the shareholders, i.e. The shares they purchase and money come through this process. This is example in terms of figures of a balance sheet, if we see both sides of the balance sheet, assets will be always equal to liabilities plus owner's equity. These are the assets. You see the current assets, account receivables, inventory, total current, fixed assets, equipment, depreciation, as we have discussed, total fixed. This is the amount, $152.3 million, and these are the liabilities. You can see accounts payable, total liabilities, current liabilities $13.6 million, while owners equities, these are the three owners, J. C. Peter and K. Peter. It seems that K. Peter and C. Peters are brothers, while J. Walsh is very famous entrepreneur. You guys should study him. So they have contributed equal amount, 100 million. This is the total of money the owners have invested, $151.3 million, while when it is added with the liabilities, it will give the figure of total assets, 152.3 and 152.3. Now coming to the next slide, break even, very important concept. It is the point of sales, or the number of units sold by a company. At that point, the company is neither making any profit, neither making any loss. It is on it is, in other words, it is the equilibrium point in the financial transactions of business. When the companies sell more products than that units, then it is in profit. Let's say that equilibrium number of unit sold by, let's say, Toyota company is 400 cars. So if sell 401 cars, then profit will generate, while if sold less than 400, 399, then it is still losing money. But how to calculate this break even? Volume of sales where the venture neither makes a profit nor incurs a loss. The break even formula is, break even equation is total fixed cost divided by sales price per unit or variable cost per unit. It is called marginal contribution. This figure is divided by this, and this gives you the break even point. It will be very much clear to you students from the next slide, where we have a graphical representation. We have two x-axis, y-axis show the number in terms of dollars or rupees, while the x-axis shows the number of units in millions, 100 million units, 200 million, 300 million, things like that. So, and this is the fixed cost, as I have told, fixed cost. If the company is producing anything, if Toyota company in Pakistan is making a single car or not, this cost, that is almost $640 million, it will be incurred if it doesn't produce a single car, let's say, for 10 years. So this is the loss to maintain and other things, security and taxes and salaries of people working within the factory, if it is producing a car or not. This is what we call the total revenue, and this is the total cost. These are the total costs. This is the total costs. This is the number of units. You see, as the number of unit increases to this point, that is around about 330 cars sold by Toyota, that is the break even point. When it sold 331 cars, the profit starts, and this thing will go up. It will go up, while its total cost will come down. Now the units will produce a revenue from which, when the total costs are deducted, the gap between the two lines is the profit of the company. So as it moves in this direction, the profit margins will go up. We can assume that this curve will move like this, while this will and this gap between the two curves, that is fixed cost and total revenue line, it will increase with passage of time. I hope you understand, dear students. So coming to almost to the end of our lecture, that pro forma sources and application of funds. What are the sources from where money will come, cash will come, and how you will use it? Very important for you. Sources are operations, new investments, long-term borrowing, sales of assets. These are the sources. While you do these things within the business, money is coming into the business. On the other hand, uses, applications of funds as increase in assets. You purchase a car, money is going out. Retire long-term liabilities. You purchase a plot, but on installments. You give installment out of business, money is going out. Reduce owners or stock holders equity. Again, reduce owners or stockholders equity. Equities, shares are sold. You purchase some other partner portion, money is going out. Pay dividend. If it's a multinational company, corporation, you have to pay dividend to the shareholders when you profit. It is legally binding on you as corporate citizen, because corporation is artificial person, and like human being, it has to perform many duties, and it has to be behave like a good human being with good characters. And what is the good character? When you profit, you give to your partner his share. And who is the share in? Over here, it's not the share of the shareholder, they are actually owners, while managers are the professional people who run the business on scientific and objective basis. Hope you have understand this lecture, and it is almost the final lecture in the series of our lecture regarding the planning, the business plan, the marketing plan, the organizational plan, and then the financial plan. A marketing plan gives you how to identify the target market, take data regarding that, and convert it into actual target market, which give you a solid market to which you provide your products and services, and they will readily purchase it. The organogram is the layout of the organization. You have plans to achieve, you have a vision, you want to reach there, but with what you need, man, machine, and material. In that, in free market economy, you use an enterprise, and those we call the factors of production, that is land, that is capital, that is labor, and that is organizations. Their interplay produce value added products and services, and it produce economic activity, and it produce development in country and province and even individual level. Then after organization, you should be sound in finances. If you want to start a CNG pump, you should have money. If you didn't have money, how you will borrow it? Either you have the character, the capacity, the past goodwill that banks will give you easily, and they will trust you. Hope you understand. Go through it, students, and hopefully it will generate a very fruitful discussion in the live session. See you inshallah ta'ala. Khuda Hafiz.